Hello, and welcome to Vested Interest. I'm Shane Green. I'll be your host. And here on this channel, we'll be covering dividend growth investing. More specifically, we will be covering the creation, monitoring, and updates to the dividend growth portfolio I've set up. This portfolio will be focused primarily on dividend growth stocks. The goal is to one day live off the passive income provided by the dividends paid by the portfolio and utilize that income stream to make other business investments. At a minimum, I will be adding to the portfolio on a biweekly basis on or around each pay period. If at any time you find the content interesting or of value, please hit the like or thumbs up button, subscribe, and share the content so we can grow as a channel and a community. I welcome all questions, ideas for future topics, or constructive criticism in the comment section below. But please keep the comments respectful and in line with YouTube's posting guidelines. A little on my investment strategy. I believe in keeping it simple and investing primarily into established businesses with a proven track record of paying growing dividends through past economic downturns. To find companies that fit these criteria, I look at what are called dividend kings. Those are companies that have increased their dividends for 50 years or more. Dividend aristocrats, those are companies that have increased their dividends for 25 years or more. Or dividend contenders, those are companies that have increased their dividends for 10 years or more. I do look at companies from time to time that have increased their dividends for less than that. General Mills would be an example. They had cut back on their increases, froze for a while. Some banks have done the same. So every stock and every company has a little bit different criteria. Just make sure you're doing it based on your criteria. I have the portfolio set to drip, so the dividends are automatically reinvested into the company's stocks when the dividends are paid. I do not believe in trying to time the market, so I dollar cost average buying shares consistently in the companies over time. So there may be times I overpay, sometimes I underpay, or times I pay fair market value. I do try to buy shares of companies in the portfolio when the dip or what I determine to be undervalued prices. I do have a day job, a wife with 2 kids, so I have limited time and resources. So I have no problem utilizing other research resources like Yahoo Finance, Fast Graphs, Simply Safe Dividends, as well as 13Fs, which are quarterly financial statements of fund managers like Berkshire Hathaway, Bridgewater Associates, and Scion Management. They give me an idea of what the big boys are investing in and additional research candidates. So some of the other metrics important to me are PE ratio, or price to earnings ratio, free cash flow, which is what is used to pay the dividends and reinvest in the company, the dividend growth rate, PB ratio, or price to book ratio, which covers assets minus liabilities, with ideally a 1 or under, PEG ratio, which is price to earnings adding in earnings growth, with ideally a PEG of less than 1. There are more metrics to use if you so choose. There's no one way to value stocks, so I suggest everyone come up with their own metric and invest accordingly to their strategy. Every investor is different, with differing levels of risk tolerance, timelines, and goals to consider. Do not blindly copy mine or anyone else's strategy. Do your own research. With that, let's get to the portfolio. The portfolio started with an initial investment of $18,000 on March 3rd. With that initial investment, the following shares were added: 15 shares of CVS, ticker CVS, 30 shares of Store Capital, ticker STOR, 10 shares of International Business, which is IBM, ticker IBM, 10 shares of Chevron Corporation, ticker CVX, 20 shares of Pfizer Inc., which ticker symbol PFE, 10 shares of NextEra Energy, ticker NEE, 15 shares of Brookfield Infrastructure, ticker BIP, 5 shares of DT Energy, ticker DTE, 15 shares of Verizon Communications, ticker VZ, 30 shares of ABB Limited, ticker ABB, 20 shares of Kraft Heinz Company, ticker KHC, 25 more shares of Kraft Heinz Company, ticker KHC, 20 shares of General Mills, ticker GIS, 80 shares of Ericsson, ticker ERIC, and 20 shares of US Bancorp, ticker USB. Our next purchase was on March 8th, where we added 10 more shares of NextEra Energy, 20 shares of Ericsson, and 10 shares of Dominion Energy, ticker symbol D. We had one more purchase in March. We picked up 25 shares of General Motors, ticker GM, and 2 shares of Coca-Cola Company, ticker KO. That wrapped up our purchases for March. Moving on to April. Our first purchase in April was on April 1st. We picked up 10 shares of Palantir Technologies, ticker PLTR, and 8 more shares of Verizon. On April 13th, we actually sold out of 2 positions, the 25 shares of General Motors and 10 shares of Palantir. They actually don't fit our criteria. Neither company pays a dividend. General Motors did. They stopped paying a dividend earlier this year. Also on the 13th, we picked up 5 shares of Chevron Corporation, ticker CVX, 29 more shares of ABB, 4 shares of ExxonMobil. On the 14th, we bought 12 more shares of ExxonMobil, 3 shares of Verizon, 3 shares of Coca-Cola. Last purchase in April was actually on the 27th. We picked up 2 shares of Lumen Technologies. Actually 4 shares of Lumen Technologies, 2 here and 2 here, and 9 shares of National Retail Properties. And that wrapped up our activity for April. To start off May, on May 3rd, you actually see some dividend reinvestments here. So you start seeing these get plugged back into the overall portfolio. Both CVS and General Mills paid out. But what we purchased on the 3rd were 2 shares of IBM and 8 shares of Lumen Technologies. That's here, 18 shares of Lumen Technologies. Then on the 17th, picked up 11 shares of Coca-Cola, 12 shares of Gladstone Commercial Corp, ticker GOOD, 10 more shares of Lumen Technology, ticker LUMN, 1 share of Stag Industrial, ticker STAG, 5 more shares of Kraft Heinz, 9 shares of Stag Industrial, 15 more shares of Brookfield Infrastructure, and 10 more shares of Lumen Technologies. To wrap up the month of May, we opened a position with 8 shares in Fidelity National Financial, ticker FNF, 7 shares in Realty Income Corp, ticker O, 1 share each in the following companies: 1 in Enbridge, ticker EMB, 1 share in Cisco Systems, ticker CSCO, 1 share in Kroger, ticker KR, 1 share in Prudential Financial, ticker PRU, 1 share Bristol Myers Squibb, ticker BMY, 1 share in Cisco Corp, not to be confused with Cisco Systems, Cisco Corp, ticker SYY, 1 share in Colgate Palmolive, ticker CL, 1 share in Leggett & Platt, ticker LEG, 1 share in MRK, ticker MRK. We also picked up 6 shares in Realty Income, 2 different purchases, 6 shares total in Realty Income, ticker symbol O. Additional shares in Dominion Energy, and we opened a position in Bank of America with 2 shares, ticker BAC. This wrapped up the month of May, and what we were doing here basically was opening some positions into companies we had been doing research in. So that's why you see a lot of 1 or 2 shares. Typically when I open a position in a new company, I'll open a smaller position. Sometimes I'll throw 10, 15 shares in it, but typically 1 or so, and then I'll, like I said, dollar cost average in over time, trying to catch them at good prices. Now let's take a quick look at the portfolio update. On the screen you'll see at the end of May, I believe we did this on May 30th, The total portfolio amount with the dividends reinvested was at $27,905.22. Our dividend yield was 4.19%, and we had an annual income at this time of $1,169.29. This is the dividend return. This is what the dividends were paying out on a yearly basis if there was no increase to the dividends and we didn't do another thing to the portfolio. Now, the dividends that we're investing in typically increase over time, or do increase over time. That's the goal. We want dividends that are continually growing, so this would grow over time. But this is where we were at the end of May, with a value of $27,905. What you'll also see here is the sector weights, where our investments are as far as we're in the market. You can kind of go through this. You'll see is 5% in consumer discretionary, 12% in consumer staples, 13% in energy, 7% in financials, 12% in healthcare, 7% in industrials, 6% in technology, 13% in utilities, and 10% in REITs and real estate. So that wraps up this update. In the next video, we'll cover purchases from June through August. So let me know what you think in the comment section below. Do you have any of these companies in your portfolio? What, if anything, are you adding at this time? And if you could give this video a like, subscribe to the channel, and share the content. And just a reminder, I am not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and personal experience for self-reflection, to document my journey, and for entertainment purposes. You should understand investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research and invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor. This is Shane Green signing off. Good luck, best wishes to you, and remember, financial security comes to those who take a vested interest. We'll see you in the next video. You take care.